Good morning, traders. I hope everybody's having a fantastic start to your day. I just wanted to hop on and make a really quick video that shows a little bit of the pre-market setup work that I do. I make sure that I have the tickers up in the second screen that I work on. I actually have 4 screens, but I'm not going to show all of those today. I'm working on scaling down the number of tickers that I'm following every day, and part of the reason for that is just the inability to effectively split my attention in so many different directions. So I don't have the lines drawn quite yet, but what I'll do is come in and look at, again, I apologize for the poor video quality. If we get a lot of interest in continuing in this direction, I will invest in some additional equipment. So as you can see on the 5-minute chart here, I already have my zones and support levels set up for natural gas. And the reason for that is that I have been trading natural gas pretty heavily for the last several months. I took a really big loss on it when it ran up here for the pre-winter rush, and I thought that I was just going to take a really quick scalp, and it turned around right away. I ended up not selling out immediately to cut my losses because it was too painful. I hoped and dreamed that it would shoot up a little bit higher, and it never did, as you can see. So thankfully I cut off around somewhere in here before the rest of this dramatic decline happened. But anyway, I have been trading this for the last few months, both the inverse and the tracking ETNs, DGAZ and UGAZ. So I've got quite a bit happening on these charts. So what you're looking at, I use a combination of Fibonacci levels drawn on various time frames and supply and demand zones. That is primarily what I am looking at for places that I think that the price could turn. And the reason for that is that the areas where it turns around quite frequently are places where you see a lot of orders coming in. So the first thing I do is start on this larger time frame just to make sure that the direction is still heading the way that I think it is, and without some miracle happening, it doesn't look to me like natural gas is going to be going up anytime soon. So I don't know how experienced you are with looking at patterns yet, but what we have here is a giant head and shoulders, which you can see has happened a couple of other times. And just because of the movements on natural gas, I like to affectionately refer to these as Batman head and shoulders. I haven't trademarked that yet, so don't rush out and get one before I do, please. And anyway, you can see that there are several other patterns that continue. So you've got your head and shoulders here, and then what was a little bit of a bear flag starting. However, we got a gap fill back up to the top where there were still orders waiting. So that looked like it could have been a V reversal. However, there were likely a lot of shorts in this direction. Now, a short buyer is when someone comes in and sells stock that they don't own because they anticipate the price continuing down. And as you can see, that's what happened. The bears took over here, and there was just a non-stop downward spiral for quite a while before it hit one of these supply and demand zones, then formed a bit of a double bottom. It's not quite equal on the bottom, but when you're looking for patterns, almost is usually good enough. And remember, when you're learning patterns, that they don't have to work out the way that you anticipate them to. Trading is a probabilities game, so expect that about 50% of the time you may not get the result that you're expecting. So always be prepared to cut your losses as soon as you see the trade has turned against you. Otherwise, you will be crying later when you lose all of your money. So we got a big double bottom reversal here, which shot back up to fill the gap from where it had made this beautiful little waterfall pattern. And and you can see that it almost immediately reversed into a bear flag, followed by another waterfall down, 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 down. So at this point, natural gas has been trending in its downward channel, and we draw these lines on ourselves. So you can come up here to drawing tools. You can either draw them with trend line or channel. There's probably a couple of others that are something I don't understand, but you know, you can get in there and play around with it. This is the Thinkorswim platform. It's free and it's quite a lot of fun. Has a lot of tools that you will appreciate if you're a TOS user. Anyway, moving on, we continue to see it tracking downwards, downwards. Double top here, tried for a V reversal, just filling a gap back up from where it had dipped previously. Made kind of a large bear flag pattern here before another giant dip down to the bottom of its channel line and another supply and demand zone. And what I'm looking at right now in this area is another double bottom right at a zone. So even though we're seeing what looks to be a bearish reversal pattern happening, the double top, I may have said double bottom. Excuse me if I ever say anything that's not correct. I'm kind of winging these videos right now. I don't have a script, so if I've said something that doesn't make sense, just shoot me a message and ask me, and I'll clarify that for you. I am human, and I tend to mix up my words when I'm winging it on a video like this. So anyway, I would anticipate that this is going to shoot down lower into this next zone, 1.8 or lower. And what makes me think that is just, you know, its historical patterns, the fact that we have an excessive supply of natural gas right now. The only thing that I think could get in the way of that is that they have also been decreasing the number of rigs producing natural gas right now over the last few months because of the decreasing cost and the excess in supply. So that could give us a surprise run back up. If I was going to anticipate a possible rally spot, I would say that it might come up here from 2.9 all the way up to 2.13, or it could just head straight down to the bottom of this channel. There's really no way to tell until it happens. These things vary greatly on what institutional buyers are doing and the fundamentals, though they do also track the technical patterns that we see on most every stock. Okay, so after I take a look at the larger time frame in the morning, I scale down to the smaller time frames to see what we've been looking at. So this is the 20-day 1 hour, and you can see that I've got a few other channels that I was observing over the last 20 days. Kind of the same action that's happening on that larger time frame, but scaled down. And I just love observing these because you can see so many patterns inside of patterns inside of patterns, right? So this could have been a cup and handle formation, which shot up to this resistance level before falling back down. And then from there, it formed a bit of a bear flag, and then down into this supply and demand zone, forming a little double bottom, which is a bullish pattern, and then snapping itself right back up here to that same resistance again before falling down. And at this point, it looks to me to be a double top, which is kind of an M, as you can see, and an M at the end of what could also be a bear flag. So I am definitely still bearish on natural gas, which means I believe that the price will likely continue down. But that doesn't mean that it will. It could rally up here to fill this gap before heading back down again. It's just the nature of the beast. So make sure that when you decide to take a trade, that you are observing the current price action, and you're not married to the bias you've developed during your pre-market scanning. If you see these little dots and lines and various bits all over my chart, one of the other things that I like to check in the morning, I come up here to edit studies. I don't leave this on my chart because it causes the, well, you'll see it causes distortion in the price, or in the candles on the chart, and I don't care to keep my chart that way all day. But what this does is tell you where historical orders have been filled on natural gas. So we're looking at / natural gas, which is the kind of cumulative futures ticker. And I'm not a futures trader, and I hope to learn it in the coming months, so forgive me if I didn't describe that correctly. Google is your friend. Anything that you hear from me that you're not sure about, look it up, ask someone else. So what I'm seeing here on the TPO for today is that there have been a lot of orders filled up in this area, so I'm not expecting that the price would go up much past here. It could go up into this area to fill that gap entirely, but more than likely it's going to continue to try to fill this gap, because it didn't pop back up over that resistance yesterday, and I could see either one giant wick or a quick run up to the 1.998 to 2 area. And on the TPO, you see here that there is a gap in the number of orders that were filled in that area. Now, this doesn't tell you that there are orders in that area, but it just tells you that there weren't very many orders there. And so I will go ahead and color this oval. Some people like to call this a hypothetical zone, or a hypo. And it just kind of gives you a reminder that the price could move into that direction. But if we look at the other side of the TPO this morning, there's also a big chunk of orders that have not been filled down in this area. Once again, that does not mean that the prices will move into that zone, but they sure could. And another thing that could happen is that natural gas just consolidates for the rest of the day, rest of the week. Ooh, I don't like that. Right here in this area of heavy order. It doesn't usually do that. Natural gas is kind of a big mover. That's one of the reasons that I enjoy trading it, and why so many other people enjoy trading it. Let's just pop back up here and remove the TPO. Apply. Okay, so we're on the 20-day 1 hour. We think that it might move lower, it might move a bit higher. So then I scaled down quickly to take a look at the 30-minute chart. What we have down here are the RSI and the on-balance volume indicator. On-balance volume I really like because it sometimes predicts a move that's going to be happening in the next few minutes. So if it's pointing up, the direction is likely to head up. If it's pointing down, the direction is likely to point down, because it indicates that's where the higher number of buyers are. And again, Google that, because it's not worth my time to put a whole lot of effort into knowing exactly what that does. I just know how it helps me on my charts. Something interesting to note here, it looks like we're having a little bit of RSI divergence, which means that the RSI and the price are heading in two different directions on this chart, which could indicate that there's getting ready to be a big move in one direction or the other. And I don't know a whole lot about RSI divergence myself. So again, that's something that you should Google. I'm just noting that the RSI is pointing up and the price is pointing down. So pay attention to that. I don't use the indicators to decide whether or not I'm going to make a trade. I am a discretionary trader, and I focus on the immediate price action, what is happening right now, and I take into consideration what's happening with the RSI and the OBV. But again, I do not use it to determine whether or not I'm going to take a trade. Okay, so from the 30-minute, and it takes me longer to do this on the video because I'm explaining to you what my process is, but really this, when I come in and scan in the morning before 5 a.m., it's a very quick look at each chart, few seconds, draw a couple of hypos, maybe experiment with a fresh zone if I need to do that. And then I draw my yesterday's high and low before moving on with my day. My goal is to make my profit target every day before the market opens. And I particularly like trading natural gas for pre-market trades, just because it tends to have a lot of volume, and that's really helpful. So just really quickly again, the 5-minute chart is my favorite place to trade. I follow Al Brooks on YouTube, and he's also got a website and a chat room. He doesn't pay me anything, but his system makes the most sense to me. So I started using the 5-minute chart based on the things that I've learned from him, and I'm looking for moves that happen in the first 90 minutes of the day after the market opens. So I start pre-market trading at 5 a.m. if an opportunity presents itself. Then I hope to be done before 9 a.m. my time, which is Mountain Standard Time. So on this 5-minute chart, we can see some patterns that have been playing themselves out for the last 5 days. It seems like natural gas is doing a lot of moving back and forth between these zones. We've got a double bottom of sorts here, another here. So that was all while the price was running up. Then here's my little Batman head and shoulders pattern before we saw another decline. Another double bottom down this direction, double top here, another double bottom before we had a big gap up, stopped at resistance. Now we've got a double top here before another decline. And then again on the larger time frame, we observed that double top as well, which makes me think that we're going to see natural gas fall down below this point and into the next zones. So let's just keep an eye on that action. Yep, so what I use here are a couple of different moving averages, and again, I don't trade based on where they are. I follow the price action and I make a decision whether or not I want to buy. I pay attention to where the price is in relation to my zones, previous support and resistance, and also the moving averages. But I don't use them as a determiner for whether or not I'm going to buy in at that time. And again, I just have to emphasize that risk management is exceptionally important. There are some mornings that I'll hop in here and I take 5 or 6 trades that I cut within seconds or minutes of having taken them because I thought the direction was going one way and it actually turned around the other direction immediately. And I would rather take a $5 or $10 loss having taken a small tester position and then cut out of that 4 or 5 times as the price continues to drop another $10, then I would hold through that entire move. Not to say that I don't do it sometimes, I think that we all do, but it's better to limit your actual losses. You can always hop back in, so get in your trade, reevaluate the situation. Ask yourself, if I wasn't already holding this ticker, would I continue? And if you wouldn't continue or you wouldn't buy into it again at that time, it's probably a good place to sell out of that trade. And of course, that's just my opinion. I have found that I don't do well when I hold much longer than a couple of minutes if the trade is not heading the direction I think it's going. And we're watching natural gas start to fall here. We did have a wick down. I'm going to be watching this really closely. If it starts to fall past this low, We'll probably take a DGAZ position coming up soon. And again, the RSI and OBV tend to support that. We're also below the 200 moving average, the VWAP, the 50 moving average, and the 9 moving average. These are just the indicators that I like to use. I'm comfortable with them, and I've been working on scaling down the number and type of indicators that I use over the last few months. I'm finding that I have more of a minimalist, discretionary style, and that's what works for me. But that does not mean that that will necessarily work well for you. Here's another wonderful example of why you don't bag hold your trades. /NQ is one that I sold out yesterday. I had taken a position on TQQQ on Friday at a little over $100, and I went ahead and held after the trade turned against me. So I bought in somewhere around here. I ended up selling yesterday somewhere around here. Now we've got what could be a bullish pattern. With my luck, it'll end up shooting right back up to the pre-news, pre-divergence level from Friday, and I will have lost $500 for nothing. But the lesson in that is not that I should have just held it longer to see if it would come back to where I purchased or show a profit. The lesson is that I should have cut out of that trade immediately. But I had some reasons for holding. However, I'm not a swing trader, and I don't care for that style, so I shouldn't have bag held it. But so let's keep an eye on this for the day. So I like to just pop in, right click on the Thinkorswim platform, set a couple of alerts to show myself where the price is moving during the day. I do a lot of other things during the actual workday, so I am not trading full time right now. So I need alerts to pop in and tell me when the price has moved in the direction that I am looking for, and the alert will sound on my phone while I'm busy doing other things, and depending on the direction it's gone, I know whether or not it's time for me to take a break and take a quick position. I use a lot of trailing stops during the day, again, because I'm not always dedicated directly to my screen. In the pre-market, I'm able to focus a lot of my attention right on what's happening tick by tick. But during the business day, like I said before, I have a lot going on in my world. So I live by my alerts, and when an alert lets me know something is happening, I take, here, I said it the wrong direction, but you can hear the alert. The alert sounds, and I will take a break from what I'm doing or go on lunch so that I can babysit a longer trade if necessary. I am not actually going to track TQQQ right now. I may decide that I want to hop back into that, but also I don't want to trigger a wash sale. So since I took a loss on that, I will try not to trade that for the next 30 days unless it looks like there is a substantial reason for me to. Wash sales are related to your taxes, so I highly recommend that if you're getting involved in trading, that you hire a financial professional and an accountant who can really help you make sure that you've got your ducks in a row there. So ES is another one that I follow sometimes. I don't trade much in ES, but it's an indicator of the overall market. And once I apply for trading futures, this is one of those that I hope to work with, and some of its further micros. This one is a little bit pricier than I can get involved with right now. Okay, so let's switch back over here. This is my primary trading setup. What we have over here is the active trading ladder on Thinkorswim, and then on this side you'll notice the time and sales, and then I pull up level 2 on the right hand side of my screen. So it generates down here. It tells me what some of the pending buy orders are, some of the pending sell orders, and I just keep an eye on what side the actual sales are printing out on. So if I'm paying attention here, it looks like the sellers are selling into the bid, and I know that because the price is 272.2. That's what's printing out over here, and it looks like all of the prices that are actually going through are coming from the bid side. So that means that the seller is giving up on the price that they were asking and hitting the bid. You need to practice paying attention to that. Some people use more complicated systems, like you can pay for order flow, which shows you quite a bit more detail on the price action and where the orders are at. I haven't used that at this point. It's something that I may do in the future, but at this point I don't see the value for what I'm doing. I'm getting the results that I want. Over here on the other side of the screen, you can compile a watch list, and you can also pull up quick charts on several other things that you want to follow. I have my DGAZ. I've already got the price levels marked. DGAZ is a pretty big mover. If I wanted to get particular, I could come in here and mark the closing price from yesterday, because that could be an important level. Yesterday's low, I think that was right at open, so here's yesterday's low. Let's go ahead and draw ourselves a quick line in there. I don't always keep these up on my chart for an extended amount of time. I always make them a different color because my Fibonacci levels and my long-term support levels, those are all in red. And so these here, the pink lines that you're seeing, I'm keeping those. They are supports from a couple of days back, supports and resistances from a couple of days back. I am not editing those out because they seem to still be valid. It looks to me like DGAZ is bouncing back and forth between those two levels pretty effectively right now. So as long as those remain relevant, I will keep them on my chart. So what you see a lot of times is that the price will move back and forth in a channel. So DGAZ has been in a bit of a trading range. So I am looking to buy when it gets down into this area or gets down into this area, provided the movement on natural gas is showing me that it's a good time to buy the inverse ETF or ETN. Sorry, I lost my train of thought there for a minute. So I think that's all I'm going to keep up right now. Let's scale ourselves back out. And we'll also watch what happens in the first 90 minutes of the market. Like I said, I like to draw a timeline on my chart. Here in New Mexico, 9 a.m. is the marker for 90 minutes. I'm going to watch what happens around this resistance level. If natural gas starts to fall and DGAZ pops above this resistance level and it becomes a new support, and DGAZ continues to climb from there, then I'll probably take a DGAZ position long and set a trailing stop loss. So a trailing stop loss allows me to give it $1, $2, or $5 room to move, and I don't have to pay attention to the trade while I am in it. If the price continues to rise, my trailing sell order will flow with that price, and if my price turns around, it will convert that into a market order and it will get me out of the trade pretty quickly. What I would really like to see happen would be for there to be a jump on natural gas sometime during the pre-market so that I could pick up DGAZ down in this area at more of a discount. But What I hope for does not matter in trading. That is going to be where I stop for the day. I hope everybody has a great trading session. Again, I will try to keep up with comments. I'm not sure that I'll be able to, though, as I've got a lot going on. Again, remember to not hold bias on the trades that you take. Hop in the trade where you think you have an opportunity to make a profit, then reevaluate the trade, determine whether or not you would still hop into that trade, and if the answer is no, then cut your losses. There's no reason to stay in a losing trade for longer than you have to. You can always jump back in later. Manage your risk and be a smart trader. Have a fantastic day. Bye.